Hi, everyone. Welcome to your latest Carson's Take 5. Ryan and Sonu. Sonu, we got an interesting development. Markets making new highs. Stocks are up a lot. But honestly, when we look around, there's not a lot of excitement. We're going to talk about this in this week's video. Where did all the bulls go? So, Sonu, you want to talk about meme stocks, which are a little more in the weeds.
Time out. We did see there were 3 bulls in New York City a couple of weeks ago.
Right? That is true.
I'm joking. Between you, myself, and the bull on Wall Street.
Well, maybe we can put that image up right now. Yeah, the UI and the bull on Wall Street there. So we did find some bulls. They are out there. But I'll just start high level, and then we'll get a little more in the weeds with the meme stocks, Sonu. What's fascinating, everybody, and we think is bullish, right? The stock market's up a lot. It's come off the lows, up well over 25% off those April lows, hitting virtually new all-time highs. It feels like every day. Yet when we look at things like investor sentiment polls, we have virtually the same number of bulls as bears. There are active investment managers. They're actually decreasing their allocation to equities the last couple months.
Professionals, right?
Professional money managers. And a little more in the weeds here, but hedge funds and large institutions are increasing their short bets against the S&P 500. What's a short bet? In essence, it's kind of a bearish bet. Let's keep it simple. So, Sonu, we're just not seeing a lot of excitement. I mean, I remember 2021, market went up a lot. A lot of people felt good. A lot of people made a lot of money. We're not seeing that right now, which, again, is consistent with, I would say, a contrarian bullish signal. Now, I want to turn it to you because one thing we're starting to see now that does rhyme, if you will, a little bit with 21, some wild moves out of some wild moves out of, well, I guess we'll say relatively
really
companies.
small stuff, yeah.
Yeah, small companies in general. Talk to me about first off, what's a meme stock, if you're going to go that route, and kind of what are we seeing in the meme stocks? All of a sudden, they've risen from the grave.
Wow, you put me on the spot. What is a meme stock? A stock that becomes a meme?
Yeah,
and on the retail side, like these are not professionally, followed stocks or analyzed by, 50 different analysts at the biggest firms on Wall Street or anything like that, right? It comes out of, Reddit, basically,
right.
For lack of a better word. I mean, which is not, I don't even know if this time it's Reddit or it could be, right? Back in 2021, it was Reddit. But that gets to the fact that I think, going back to something you said about professional investors, all of us get anchored to something we've seen recently. And I think a lot of professional investors, I like to think we are not in this group. I don't think we are in this group, but a lot of them are still anchored to what happened in April with Liberation Day, right? So, they're pessimistic and all of that. Whereas, who's not pessimistic are retail investors. And maybe it's a Reddit crowd, and they're driving some of these stocks up 100%, 200%, 300% a day. I mean, I won't name names because I don't want to make recommendations.
Right.
You can all look at what those are. But yeah, we're seeing some frenzied activity on one side and literally the opposite amongst the professionals.
Yeah, we won't give it away but a big retailer right now, like today was up, 70% at the start of the day, then it was down, then it was up, then it was down. Literally, I don't know.
There's another company that buys it does online buying and selling of residential real estate, right? I don't even know if you could do that. And there's a whole bunch of companies associated with the crypto industry. And so, like I said, there's a pocket where there's a lot of frenzied activity. And then there's everybody else, including all the professionals.
Yeah. And, again, I remember when you drive your car, right, and it says objects in mirror appear closer than they really are. So again, that's kind of the market, right? We think these things that just happened are really close to us and we're worried about it. But again, we have to look forward, right? And again, April was back there. All the volatility is back there. My big picture view, again, as we've laid out with the fundamentals, earnings are solid, profit margins are solid, inflation, there's some pockets that are coming up, but we talked about that last week. Inflation's not a major worry. Maybe we can get some Fed cuts here. Believe me, there's some reasons the Fed might not cut, but there's still reasons, I think, to think this is a bull market. And when I see large institutions that have, honest to goodness, missed this rally and are now betting against it, I think that's bigger term bullish. But again, in 21, Sonu, when we saw the crazy times, that did lead to a major peak. I just don't think we're there. What are some things that would worry you from a sentiment point of view, maybe?
At this point, if maybe Jerome Powell gets fired.
Yeah. Okay.
That may be a sense. Or if inflation actually creeps up, like to your point, right? There are pockets where we are seeing tariffs leading to more inflation. But on the other side, we are seeing big disinflationary forces, right? On rents, things like that, airfares, hotel prices. These have been going down for about 4 or 5 months now. And so that tells you that, there's some softness in the economy, and I differentiate softness from recession-like conditions, right? So there is some weakness, and we're seeing that in payroll growth has slowed, wage growth has slowed, so people are not going to be spending as much, right? And we're seeing that in the level of spending that people are doing at restaurants, for example, right? Restaurant inflation, because the food prices are high. People are still going out, but not to the extent, they were back in 2022, 2023, where it was going gangbusters activity. Everyone is looking to get out after COVID. We're not seeing that anymore. And maybe that's not a bad thing, Ryan.
You're right. And we laid out in our mid-year outlook that just came out a couple weeks ago, and we talked about it in this very video series a couple weeks ago. The economy is still going to grow the second half of this year. Maybe it's not going to grow as quickly or as fast as it was last year, the year before. But honestly, the market's not about good or bad. The market's about better or worse. And 3 months ago, right now, we were in a bear market and everyone told us we had a recession coming. That was what was being priced in. And now we're getting some more growth. And call me a glass half full person by nature. Maybe we can get a little bit better economy coming forward. Maybe we do get a couple of rate cuts that kind of help the housing market, help small businesses. I mean, there's a reason the market's at all-time highs, not just in the U.S., globally. We've talked a lot about this. This is a global bull market. One of the smartest indicators we have on the economy is the stock market. So the stock market hitting all-time highs, hopefully is a sign the economy is going to hang in there the second half of this year. So with all that, though, again, it's very interesting. We're hitting all-time highs, yet we do not see the over-the-top optimism that you kind of see or tend to see near major market peaks. And for all the investors out there watching today's video, that should hopefully be music to your ears as this bull market's, in our opinion, alive and well. We'll see everybody next week. Take care. Thank you.